Anthony Pompliano, the man himself.
Thank you.
We're talking all about things about digital assets right after this, guys. All right, guys, we're back here. Welcome, Anthony Pom. I'm going to call you Pom from on the show, Pompliano, from Morgan Creek Digital, partner there. Just a quick background, but obviously welcome to the Daily Exchange.
Absolutely. Thank you so much for having me.
Good to have you, my man. Now, just a bit of background here. Joel, if you want to bring up the Morgan Creek so everyone knows exactly what this is all about. You have a digital asset index fund. It gives investors exposure to 10 digital assets. Bitcoin, Litecoin, IOTA, Monero, Bitcoin Cash, some of them, other coins, about 3/4 of the total market cap. On top of that, you are a well-loved Twitter personality, writer, podcast of Off the Chain, which is Off the Chain, and you pen a weekly newsletter for institutional investors. We're very excited to have you on the show, and obviously welcome. Now, you are one of, I guess, the most positive Twitter guys I think that are out there, which is awesome. And
yeah.
Just, what's your, what makes you so bullish on crypto?
Look, I have a thesis that every stock, bond, currency, and commodity is going to be digitized at some point in the future, and crypto is going to be a huge piece of that, kind of based on blockchain or cryptographically secure. It opens up a world of possibilities where you start to break down borders. You actually can make some significant impact on the inequality that we have in the world today. And I don't think that there's anything more important to be working on right now than this. And so I'm super bullish on it. I'm excited, and I've never been one to kind of hide my excitement about something. And so what you see on Twitter is just kind of how I am and what I think on a daily basis.
That's so sick. I love it. On this show we get fired up because there's nothing better than being fired up on a show. Let's talk about when you started first looking at the space. Obviously, you started to buy in and things like that. What were sort of the bull signs that you saw back then?
Look, there's two things. We talk about the injection of capital, right? Both financial capital and intellectual capital. And so when I first started investing, somebody who's way smarter than me said, follow the money, follow the talent. And if you take that as a core component of investing, there's no better place or no better industry than crypto today to see talent and money flowing in at a pretty impressive rate. And so, we're excited about it. And I think that people are still trying to find their way in terms of the bear market. But the things that we're seeing in the private markets and kind of behind closed doors of what's being built and the impact that stuff's having, I think people are going to be pretty impressed when more of this becomes public.
Right, sick. Just want to talk about very carefully, we're talking about the market right now, and I think there's a lot of movement in terms of Bitcoin. Let's really get into that, because I think we've got a lot of other bits and topics to go through, but I just want to talk about, because the main game right now, the narrative around Bitcoin is it started off as everyday digital cash, so it moved into digital gold and a hedge against central banks, considering, obviously digital cash and gold is quite a difference.
Yep.
Whereas, one obviously encourages you to use it, the other one encourages you to sort of hodl it. What are your sort of views around the narrative around Bitcoin right now?
Yeah, so part of the beauty is the narrative doesn't matter, right? In the sense of Bitcoin is beautifully designed in a way where regardless of the narrative, regardless of what people do, the system works, right? And it's built by math and software, run by math and software. And so I think a lot of people conflate short-term utility or short-term viability with long-term potential, right? And so we look and we say, hey, I would love for this to be electronic cash or digital cash. Well, just like gold at some point was a currency and was a store of value, and then we eventually went to gold-backed dollars or fiat currency and now we have this fiat currency that's not backed by a commodity. I think that Bitcoin itself will go through this evolution where at the core, gold is actually really bad currency compared to the currencies of today. at the time, it was a great currency, right? And so what we're seeing is kind of this layer one technology where it's a transaction network that is cryptographically secure, that's got math and software at the core. And so as scaling solutions, layer 2, layer 3, all this stuff gets built on top of it, we will get additional use cases or additional applications from that Bitcoin network. But what that does is it widens the total addressable market. Right, today, Bitcoin itself is very specific for a very targeted group of people. As we get a lot of this innovation, kind of scalability and stuff, we'll actually see more and more people be interested in it. And so that's where a lot of the growth will come from in the future as well. So I don't think that you can quite say, hey, it's not electronic cash or it's only a store of value today, because what you're doing is you're taking a single point in time that probably isn't indicative of what this thing is going to evolve into as we just have more time to write code, et cetera.
Awesome. Now let's talk about, I guess, the Lightning Network.
Yeah. Big fan.
Big fan.
Yeah.
Well, why don't you want to start off? Tell us about why do you love the Lightning Network?
Yeah. Look, so there's what I would consider the technical argument that many people will make of, hey, this is a great scaling solution, right? It works, all this stuff. I think the part that's more exciting to me is even if you don't believe in Lightning as the scaling solution, you can't argue with the growth. You can't argue with the adoption, right? And there's this saying that, when I worked at Facebook, code wins arguments, right? And so it's just, you and I can debate all day long, but code actually wins the argument. And so I think what we're seeing with Lightning is it is a scaling solution that's being adopted at an incredible rate. It's global, and it's probably one of the fastest growing products, if you will, right, or fastest growing projects in all of crypto. And so anytime you get a lot of smart people working on something and they start getting that adoption, I think that it becomes really powerful, and it's something that people can't ignore, right? You don't have to believe that it's going to win, but you can't ignore it, right? And that's the first step to it actually winning, is this idea that you can't ignore it, right? And so I think that they've done a great job there. Elizabeth, Roast Beef, et cetera, the team there at Lightning Labs is really pushing the pace of innovation, and I'm excited to see them continue to do that.
So a lot of people are talking about, isn't it an appropriate evolution? I think it's something you talked about as well, Do you think it strips away, I guess, from Bitcoin being a buy and hold asset potentially?
Bitcoin's the best performing asset over the last decade, right? It absolutely smashed the S&P, Dow, et cetera. And I think that as we look forward, remember, the beauty of Bitcoin is that it's so simple, right? And so I talk internally a lot with our team and say, look, the best trade may be the simplest, right? And the reason being, Bitcoin is predicated on a single thing when it comes to price, supply and demand. And so you only need to believe in two things to believe that Bitcoin is going to be worth more in the future than it is today. You have to believe supply and demand economics apply, right? Which I think most people would agree that is true. And then you have to believe that demand will increase in the future for a fixed supply asset, right? And then obviously the only thing that will move is price. And so what we see today is there's been a subset of people in the world's population that bought into that, and they were right. A lot of people will say those people were lucky, right? They backed into it. They didn't know what they were doing, et cetera. Well, now there's this big crash, right? You kind of wash out all those tourists, and what remains to be seen, but we tend to think is...
Wash out all the tourists.
The tourists are gone, right? Or most of them, at least. And so what
it's like Times Square right now. Literally, it's freezing out there. I was there yesterday morning. Woo!
Look, whenever the crypto winter, right? No one wants to go.
I'd say blizzard now. The weather report is blizzard in cryptocurrency.
It may get worse, right? And that's actually probably a positive thing because you really flush everybody out.
Yeah.
And so the people who truly believe. Now, the beauty is every single time that this has happened previously, you get a higher low, right? The kind of the bottoming of the market or that winter is a little bit better than the time before. And so as long as that continues to happen, what you get is a truly scarce asset that more and more people want. Yeah. There's only 40 million people that are estimated to have interacted with Bitcoin or blockchain technology, right? And so 40 million people out of 7+ billion people in the world is nothing. And so, will we see 2017 again? Probably in the future. And if we do, it's going to be even bigger than what we saw in 2017, which has pros and cons to it. And so I think people have got to get away from this idea that, Bitcoin's good or bad, market cycles are good or bad, and just, it's a fact, right? This happens, or this is an asset, and how it's applied, how people interact with it, that's what's good or bad. And that's where we really need to be cognizant and kind of protect people as well.
Okay. Yesterday, I spoke with Paul over at the Wall Street Journal.
Yeah.
And he gave an analogy around the CB radio. The CB radio was, a big trend. It was a massive trend.
Those were cool, man. When I was a kid, those were cool.
breaker.
My brothers and I used to be in different bedrooms with walkie-talkies, CB or whatever. We just call each other.
Yeah.
For no other reason than just think we were cool.
Yeah.
They were in the movies or something.
Yeah, it was cool. It was cool. It was in the movies. It was pop culture. It was massive, right?
Yeah.
It had pseudonyms.
Was it Dukes of Hazzard, right? That one? Right?
Yeah. Yeah, that's badass. And he talked about, maybe, I guess, did Bitcoin have a similar phenomena where the CB radio, became popular, mainstream, went like warm, and then it became too noisy, it almost unusable.
Yeah.
And people were like, well, I can't really handle this. I don't know what to do with it. And then it went back down because it couldn't scale, I guess, to some extent. And I remember, sending Bitcoin when it was pretty congested and it took a while. What's your thoughts on Paul's sort of analogy around that?
So I would argue that Bitcoin's not the CB radio, Bitcoin's the radio waves, right? Meaning that the CB radio is one application, it's one way to use radio waves, and it works for certain people in certain situations. But then what we decided was, hey, that's not super scalable for everybody, so let's go figure out other ways to incorporate radio waves and use that for other applications or other groups of people. I think Bitcoin's actually the radio wave, and CB radios are popular for a point in time for a certain group of people, but you still need those other applications for radio waves to actually end up being valuable, right? And so what we're seeing with Bitcoin is some people want to use it as a medium of exchange today, some want to use it as a store of value. Some people are literally living on Bitcoin exclusively, right? I talked to a guy recently in Venezuela. He's like, look, for the last couple of months, that's what I've lived on, is using Bitcoin only. Well, that's not everybody in the world, and so we need other use cases, other technologies, whether it's scaling solutions, security, all this stuff is going to be built. And so if Bitcoin's that radio wave, now we need everything else around it to actually make sure that it's sustainable and valuable in the future.
Yeah, I think it's a great analogy.
Paul's fantastic, by the way.
Yeah.
I'm a big fan.
Big fan. he's really, I respect him for it.
Yeah.
I think he's probably got to be right up there in terms of journalists, in terms of knowledge.
Absolutely.
Graph. So big shout out to you, Paul, as well, for thanking you for growing the industry as well. We had Craig Wright on the show the other day. I know he's a very controversial figure.
Was he in billionaire mode or not?
I'm not sure. I'm all about like giving everyone a chance to say their piece, and
of course.
And I think we're trying to grow the whole industry. Just bringing up your table. I don't know. I noticed that of the assets in Morgan Creek.
Yep, digital asset index fund.
Yep. My apologies. The digital asset fund, the index fund. Bitcoin SV is not in there, even though you may have received that from the fork. And I know it's quite a project. I just wanted to just sort of get your view on that project and sort of I think. I'm guessing, or not sure, that you've sort of removed it or sold it, or maybe just wanted to understand that.
So part of the beauty of the Digital Asset Index Fund is we didn't want to reinvent the wheel, right? We said, look, let's look in the public equity markets. Indexes have worked really well for a lot of investors for a really long time. And what these investors want is they want beta exposure, right? They don't want to pick stocks. They don't want to try to get alpha. They just want whatever the market does, I want exposure to that because I think that market is actually going to perform pretty well. And so when we created the Digital Asset Index Fund, what we did was we said, let's take the top 10 cryptos, market weight average them, right, or weight them. We'll rebalance it monthly. And then what we also did was we created an index investment committee. And that investment committee, what it allows us to do is to create rules similar to the S&P 500. One of the rules that the S&P 500 has is this float requirement. So, for example, Tesla is not in the S&P 500 because it's too closely held of a stock, right? And so what we did is, for the Digital Asset Index Fund, was we created a similar float requirement. And any crypto that has 30% or more of the supply that's held by the issuer or in a related entity, then they're ineligible for the index. Now, if they dip below that 30% threshold, they become eligible, and anybody who's below it today who goes back above that threshold become ineligible. Mm-hmm. So today that, XRP, NEO, Stellar, things like that are affected by that rule. And really it's because this index is for institutional investors. And so one of the risks of having highly centralized tokens in an index is that there's a lot of unknowns, right? There's regulatory risk, there's all sorts of liquidity risk, there's price risk, et cetera. And so I think that, what we really tried to do is recreate the S&P 500 in a similar structure, model, beta exposure type mechanism for crypto. And look, we're not claiming that it's perfect, right? There's obviously people who are going to disagree with certain decisions we made or certain rules we made, but we think that it gives investors a really good beta exposure to a market, which, look, we issued $1 million challenge that said, we'll take our digital asset index fund over the S&P 500 over the next 10 years. And we issued this to public investors, and nobody took the other side. And so what it tells me is, if you look at today where we think public
No one
equities,
took the other side at all.
nobody took the other side. Now we are stacking the deck in our favor because we happen to think that public equities are probably a little overvalued right now. We think cryptos are undervalued. So over a 10-year period, if crypto is going to 4, 5, 10x, whatever it's going to do, public equities are likely to do kind of 1 to 4% annualized return for the next 10 years. It's just math, right? Cryptos are going to outperform if you can have a proper index structure over a decade versus that S&P 500. And so came out, issued the challenge, nobody took it. And I think it goes back to the saying, follow people's money, don't follow what they're saying. Because if people really believed that crypto was going to zero or it wasn't going to be real, that's easy money for them then. But nobody stepped up. So we'll see how it plays out, though.
Oh, I like that. Okay, so I don't know if you had some final thoughts on it. So Bitcoin SV, too tightly held, so it's probably...
So with Bitcoin SV specifically, right, Bitcoin Cash, we just left it at that. All these forks, et cetera. You can imagine from a management of the fund, we've got a great partner in Bitwise who are investors in the company and are partners in terms of the management or the structure of the index and the management of the fund. And really what ends up happening is one of the biggest costs to managing these indexes is all of the trading and kind of the decision making that comes along with this. Well, how many times is Bitcoin Cash going to fork? How many times is Bitcoin going to fork, right? So some of this stuff ends up being really important for us to make decisions around, look, we're going to stick with or support X, Y, Z, and go on, right? If we try to incorporate every single variation that it comes out, we'll spend our whole time just doing that, right? And so I think that this is more of, for an institutional investor, they want exposure to the beta market, right? But we think what we got in there is going to do that. And obviously, we're constantly reevaluating it. And if something changes in the future, we'll address it.
So just wanted to just sort of summate nicely and ask you, what is your investment philosophy?
Yeah, comes down to two things. One is every stock, bond, currency, and commodity is going to be digitized in the future. And really that's just laying the foundation for an automated world. So blockchain, crypto, it all sounds great. It's kind of sexy to talk about today. I really think that we're just investing in a digital automated world. Right, and so majority of that will be blockchain and crypto, but not all of it. And when you look at it from that perspective or that lens, you're probably less interested in a lot of the shiny, potential 10,000x type stuff, and you're looking more for how does this technology fit into that digital automated global world, right? So I think that's one core thesis that we have. The second is this Howard Marks quote. So Howard Marks basically says, in order to be in the top 5% of returns every year, you got to take so much risk that if you're wrong, you end up in the bottom 5. And so if you never want to be in the bottom 5% of returns, you should never take enough risk to end up in the top 5, right? And so it's all about managing risk. And so for us, we're less interested in being top 5, bottom 5, and we're much more interested in just kind of producing above average returns year in, year out for 20, 30 years. And what happens when you do that is you actually avoid the drawdowns, right? You avoid the bad years, and you end up as one of the top 5, top 10 investors in the world in your field. So that's what we hope one day to be able to claim, but it's going to take a lot of work and a lot of discipline along the way. And so we're doing that now.
Just want to bring up again the fund makeup. Sorry, Joel, I know we're jumping around a little bit there, and it's probably very difficult for you. Sorry.
I'm laughing because people are texting me about the LaCroix that we have here.
I knew
that's all. That's all we had.
I knew. So, which image was that? Just the fund makeup. Obviously, you said there's no XRP in that makeup.
Yep.
Thoughts about you had Ethereum Classic, I believe, was not in that as well?
To be honest, I'm not sure. The best part is, yeah. So
it is in there.
Sorry, it's very small. Yeah. So remember, this is a top 10 cryptos market weight average rebalance monthly,
right.
And so some of these smaller ones, like as you see on the screen, Zcash, IOTA, Ethereum Classic, based on the rebalancing, they may dip in or out of the index just based on whatever that top 10 market cap is given the rules.
So the question I sort of had was, as Palm's going along, you're looking at a coin and you go, yes, that fits in. So this one, it doesn't fit in.
The beauty of the structure is that we don't make any decisions like that, right? We set rules, and it's a rules-based index methodology, and so it removes a lot of the, hey, do you like this token? Do I like this token? Do you think it's going to go up? I think it's going to go down. What do we do? Yep. And it's more of just, here's the rules. Everyone knows it is transparent, and what we're really trying to capture is 70-80% market coverage, and really allow that beta market exposure for as many investors as want to participate.
Okay. You guys, so this is probably, I think it might be a different fund, or we noticed that you wrote recently, you invested in the seed round of RealBlocks, a property investment platform. This is obviously maybe just tell us a little bit about that and your investment.
Yeah, so again, going back to that thesis of every stock, bond, currency, and commodity will be digitized, RealBlocks has a platform that essentially allows for the tokenization of real estate. We're incredibly excited about the product they've built, kind of the traction that they have. They'll be making some announcements, I think, over the next couple of months that will really kind of shock people. And then the team, right? So I've invested probably about 100 companies at this point over my career, and the best deals I've ever done are backing great founders. And it sounds pretty cliche, but what ends up happening is a lot of the mistakes I've made in investing, I fell in love with the idea, or I fell in love with the product, or I thought, oh, if I was running this company, this is what I would do with it, or what it could become. But every single time that we've made an investment and just said, this is a great founder, I actually don't know the answers to, what's the right product, what's the competition going to do, what's the market going to do. We said, this person we're betting on to figure it out, we've never gone wrong. And so I think that the team at RealBlocks is a perfect example where they're incredibly impressive in terms of their pedigree, their backgrounds. They were able to articulate a really compelling vision, and so we got excited when they told us that. And then the other thing is that they've shown a propensity for action or momentum. So they've got some wind at their back, and we're excited to be investors there. We're alongside a number of other great investors like Science and others, and I think that they've got a real shot to go build something pretty valuable.
Awesome. Want to talk a little bit about dApps, obviously moving over from potentially Ethereum. Some were talking about moving to Tron even, which is fresh.
Interesting.
Nothing wrong with that, maybe, people make a good business out of that.
Listen, here's what I'll tell you about Bitcoin Cash, Bitcoin SV, Tron. Every single thing that we have in this entire industry is this idea that experimentation should be encouraged, right? We actually don't know what the solutions are going to be. Now, you have your opinions, I have my opinions, right? We can probably put some probabilities on what wins, what doesn't, what works, what doesn't. But at this point in the innovation cycle, we should actually be encouraging as much experimentation as we can. There should be no sacred cows, and let the code and adoption and people in the market win, right? And they'll tell us what works, what doesn't work. And so if we have 10 different platforms where dApps can be built, well, eventually developers are going to go try to build on 10 different platforms, and they're all going to collect on a single one that they think is the best one, that's got the best tools with the most security or whatever it is. And then as investors, we say, well, that one must be pretty important if that's where everyone is building, if that's where everyone is using. But we can't actually determine what the best one is unless we have that experimentation, we have the multiple options, and let the market decide, right? And I think too many people get caught up in the narratives and kind of the religious tribalism, which is probably just unhealthy for the overall ecosystem.
Interesting. Because just bringing up this data here, latest report from DR Research, gamblers apparently moving from Ethereum to EOS and Tron, which is, I think, quite interesting. Sorry, Joel, I know we're jumping around.
We're putting Joel to work back there.
Yeah, we are. He's working real hard on it. It's the same one you had just before. We had we that was a nice one as well. We'll come back to that. It's a mining graph. Yeah, so we've got a lot of. Is the Lacroix being famous? Do you have a famous Lacroix?
I've got people who are definitely texting, and they're pretty thrilled. I feel like we should be getting paid for this marketing.
Yeah, we got intense. Look at this coffee cup. Like whoever's making this, I try and keep it as generic as possible.
You set me up for this.
Yeah, I did. Just coming back. Sorry, Joel. So this gambling movement you can see here, EOS sort of
and Tron,
and Tron. I guess the distribution. Is this a signal to you?
Look, again, the beauty of this stuff is we're getting better at understanding what's actually happening. There's a bunch of innovation that's been going on. There's been a bunch of kind of different narratives or people moving between chains or creating new chains, all this stuff. And probably pre-2017 for sure, and maybe even some at 18, it was really hard to understand what was going on and actually measure this stuff with any level of quality, right, or reliability. And so I think that now what we're starting to see is the ability to actually even see that information, right, and say, oh, wow, this is pretty interesting that you're seeing market share actually be eaten by other competitors. And so I think that, part of the argument is knowing that is really interesting and worth paying attention to. But two is, what's the sustainability of it, right? A lot of times we'll see everyone go and they try this new thing because the technology promises something, 6 months, 12 months from now, are people still there, right? That's the big question. And so I think that, whenever you see market share getting eaten away by that, it's two things. It's one is whatever the technology everyone was using previously is probably not 100% living up to the promises that it provided. And then two is this new thing is promising something that people want. Now, let's go visit it 12 months from now and see, is that still the case, or everybody go back to what they were already using, right? We just can't actually analyze that until we have the data points.
Need some more time. Let's talk about mining and the price of mining of Bitcoin right now. I think it's, there's a lot of speculation. Some new report again from DR come out. Also, JP Morgan estimating the production cost of Q4 2018 at $2,400. DR calculating it at $3,100. And now JP Morgan is predicting, obviously, with a difficulty corrections, miners sort of dropping off the network at around 1,260. This is sort of on some of their latest data. I think, Joel, you've got a mining graph here. Look, so we're looking at that. These are some other at 5 cents a kilowatt hour. The S9, the S15 being. You can see some of the graphs
lower cost, Yep.
So lower cost. This correction I think is really interesting. I guess I wanted to just ask openly. What's your view on the Bitcoin and Ethereum break-even mining price and its correlation to price?
This goes back to this idea that Bitcoin is beautifully designed, right? When price explodes, you get a big rush of people, difficulty increases, and you kind of get this balance, counterbalance, if you will, to the price explosion. Well, when price decreases, you get the same thing. So, whenever we're talking about this death spiral, it's this idea that, hey, as price continued to decline, people were going to become unprofitable and they were going to leave the network, right? Well, as every single miner left the network, what actually happened was difficulty decreased, making the people who could sustain mining more profitable, right? So it increase the incentive for them to stay and kind of lock them in even more. And so the difficulty mining adjustment, or kind of the dynamic aspect of it with the price movements, is a really interesting thing to watch, because what happens is at no point will everyone be unprofitable, right? But also at the same time, there's unlikely to be a scenario where just price explodes, everyone jumps on and stays profitable, or kind of continues to mine at the same profitability forever. And so when it comes to mining, I tend to think that's one of the most sound aspects of crypto, right? It's one of the most battle-tested. People have been mining since, literally one of the first days. And they've kind of been through multiple market cycles. They use different hardware. And the algorithm has proven to work really, really well. And so we have no reason to believe that won't change in the future. That it will change in the future. But also at the same time, that doesn't mean that it won't. And so we just got to watch this stuff. And the beauty of crypto is it's 24/7, 365. And the people who pay attention every single day and are on top of this stuff and really, focus on the data and the information end up getting rewarded in the long run, because, again, they just have more knowledge. They have asymmetric advantages over other people. And that's somewhat true in public markets or other, financial markets. But it's been so commoditized at this point, right? Everyone knows the earnings reports, right? Everyone is, taking pictures of the oil wells and understanding how much oil there is, or they're taking pictures of the Walmart parking lot at this point, right? How many cars are going in and out, and they're able to try to get this stuff. It's all priced in for the most part, right? There's very little asymmetric information. Crypto
pictures of the
have you heard about this stuff? So people will fly drones or satellites, right? And they'll actually take photos of cars in the Walmart parking lots or in other parking lots, because they're trying to see how much traffic is there, right?
Yeah.
Are sales going to be up or down? It's crazy.
That's next level.
Right? In crypto, we're still like, hey, is the coin market cap accurate or not? Right? Like we're still in the really, really early days.
Like XRP, is it overinflated? Oops, sorry about that.
Right.
I mean, just
Right. So the where we are compared to these more mature legacy markets, we're not. People like to say we're in the first inning. We haven't even started warm-ups yet. We're still in the dugout, right? And so I think that there's a lot of work that's got to be done. And again, the people with the lowest time preference or the most patience are going to get rewarded nicely here as this thing matures.
Okay, I just want to talk ever so briefly about, there's two new coins on Nimblewimble, Grin and Beam. They're very mining orientated. They have interesting inflation dynamics, which I've seen some graphs where it kind of looks a little like Bitcoin over the long term. Wanted to see, and some people are saying, this was part of the initial. It was one of the proposals of Bitcoin at one point in time. Wanted to get your view. Everyone's really hot on these two coins right now. Did you have a view on these? I guess as are they potentially base layer that could be added in to Bitcoin or?
There's a lot of maybes, right? And I think this is a perfect example where I tend to get a little bearish when I see everyone else overly excited. And so especially when I see the Silicon Valley crowd that's like, oh, we know something that nobody else knows, right? But everybody knows the same thing and they're all excited about it. It's very rare for a company, a project, a technology, for everyone to know about it, everyone to have consensus that this is really cool, exciting, and it to work out. Right? Some of the biggest breakthroughs, or most of the biggest breakthroughs, are actually non-consensus things. And so I think that my one concern here is is the excitement and kind of hype around some of this stuff warranted? We'll see. But on the flip side, again, it goes back to this idea: there's no sacred cows. There should be nobody discouraging innovation or experimentation. And I think that this is exactly the type of stuff people should be working on and really trying to push the envelope and let the market decide. Right? We will come back in 5 years and we'll know, did this stuff work or not? Was it better or worse than Bitcoin or some other chain? But it's just going to take time.
Okay. We want to come back to an article you've written recently about Kik Messenger with the Kin token and the SEC.
Yep.
I know, Joel, I'm jumping all around for you on this, but we have a screenshot of your article, but just wanted to give a summary and a couple of quotes. I think, Joel is on the money. Well, look out.
That's pretty good.
Wow. Hundreds of millions of downloads of this messaging service that can be, signed up without an email address. I think it's very important. It's privacy first, as you quoted. Its privacy first approach has obviously been created some headaches for the law enforcement potentially over years. This is just sort of part of your quote here. And so again, I'm just sort of, I guess from your article, $98 million was raised in the ICO.
Yep.
And Kin, obviously trying to be used is the token for the Kik platform.
Yep.
Kik itself has been incredibly successful, integrated with over 30 or so different apps, Android, iOS. And just a quote here, according to Kik CEO, hundreds of thousands of people have been using Kin as a currency to buy goods and services on these digital platforms. This sounds like a legitimate utility token, right?
So Kik's argument is that it's a currency, right? And so what it basically goes to is this idea that the SEC, I think it's the 1934 Securities Act that created the SEC.
Is this the Orange Grove?
Yeah, so there's all kinds of stuff in and around this 1934 Securities Act, but one of the things it says is a currency cannot be a security. And so Kik's argument is that they had a pre-existing network, right, which is one of the things that the SEC has previously mentioned as important to them. And they introduced this token as this currency within the system, right, the ability to buy goods and services. And the thing that is probably the most interesting thing to me is, out of all of the projects that did ICOs and the SEC has kind of been investigating, looking at, et cetera, Kik actually, in my personal opinion, from an outside looking in, has more ingredients that I think would stand up in court and defend that, hey, look, this isn't a security, than a bunch of other projects. Right? I think that there's a whole host of other projects that are easier to argue that's a security. The other thing is Kik's got a lot of money, right? They're well connected. They've got Tencent, Union Square, et cetera, all as investors. And it seems like the team is, they want to kind of fight this or push back. And they're not just doing it for themselves. They're saying, hey, look, the crypto community's got to say enough is enough. Now, I'm not a lawyer. I have no clue who's right, who's wrong. I think that this is going to go in front of a judge, and the judge is going to interpret the law and decide. But what I think is important and what is hard to deny is, if this does go in front of a judge and there is a decision, it's probably going to be one of the more important decisions that we're going to see in crypto,
yes.
In kind of the first decade or two,
yep.
Because it should be one of the key pieces of or rulings that will determine how a bunch of other tokens and ICOs get treated. So if it goes in Kik's direction, I think actually there's going to be this explosion of people following the blueprint that they provided. If it goes in the SEC's, kind of corner, I think that there's going to be much more of what we've seen over the last year, where people have been kind of a little gun shy to engage in the ICOs in the United States. And so I'm kind of watching, and frankly, I'm super interested to see how it turns out. But I'm not a lawyer. I got no clue how it turns out, right?
Yeah. Any other regulation you think as a major blocker for crypto or blockchain and assets that you see as?
Yeah, I'm beating a dead horse at this point, but the accreditation laws. I mean, they're absolutely ridiculous, right? I like to say a lot that the accreditation laws are violating the American dream. And I say it because, and it's hyperbole, but I say it because I want people to really sear that idea in their head, right? Is the American dream is that anyone from anywhere, no matter who you are, what language you speak, you can come to this country and you can live a prosperous life, right? You can chase that American dream. Well, historically, private investing has been one of, if not the best investment opportunities available to investors. And we box out a majority of Americans with these accreditation laws because we use wealth as an indicator of sophistication. I don't think that there should be no rules, right? I actually think that there should be standards or accreditation, if you will, to allow for safe marketplaces where investors are protected and they're allowed to engage in investments, but they're not doing it at their own kind of peril, if you will. My problem is with how we actually standardize that or accreditate them, if you will. And so wealth is a horrible example. And the easiest way to talk about this is there's a lot of dumb rich people. So, okay, let's take that out of the case. And then people will say, oh, well, wealth is a signal for the losses that you can stomach. So if you input 10% of your assets into something and you lose it, even if it was millions of dollars, you're wealthy, right? And you can actually continue without too much harm. But there's no cap on the investment. So if I'm wealthy, I can still go put 100% of my assets in something and no one can stop me, right? So it doesn't really kind of fit what the law says. And so what I think is a better example is some sort of sophistication test or education test where, look, if you put in the time, right, you put in the work and you become educated and you understand how to underwrite risk, you understand, terminology, how markets work, all stuff, and you can prove that through, think of it kind of like an SAT type test, you should be allowed to invest in whatever you want. Right? Now, there's a whole bunch of unknowns that need to be figured out there in terms of, what's the criteria, who's going to actually provide that educational information, what does that test look like, should you have to score 100 on it, a 70 on it, right? Kind of where does that come? That's for people way above my pay grade to figure out, but I do think that we need to shift from this kind of wealth as an indicator for sophistication into something that's more education-based. And so if I could change anything, it would be those accreditation laws to allow more people to participate in these private investment opportunities. And I think we saw the ICO market showed that there's pent-up demand for it. We just got to figure out how to do it in a regulatory compliant way so people can participate without getting in trouble.
I think it's fantastic. I think it's that will bring a lot of bring back the American dream, which is awesome. I want to talk about there is a tweet pinned to the top of your Twitter, which I personally love.
All right.
And I don't know if Joel, you can bring up that tweet. It's obviously it seems like a mantra. My rules of business: build shit people want, never give up, avoid arseholes, question assumptions, learn new ideas, and always reward ambition. Can you tell us why is this mantra so important to you?
It's just what I believe, right? And so if you think of Twitter as kind of a resume, if you will, or a landing page, it's a stream of consciousness. And so if people want to know, how I am, what I think, some of the ideas that I have, go read the Twitter page, and it's pinned right at the top, and it's a filter, right? So if you don't agree with these things, you're probably not going to like me, right? If you agree with these things, we probably got a shot at being friends. And by pinning it there, I think that too many people are scared to kind of publicly state, here's what I believe. And so by doing that, it's just a way for me to say, look, this is where I stand on a couple of things that are important to me, and hopefully that just actually attracts the right type of people to the conversation on Twitter.
Okay. You obviously write a lot about banks, so Deutsche Bank, Danske Bank, laundering. I can't say if they have not laundered $200 million. Allegedly. There we go. Be careful what I say. How important is it, I guess, for you that you state these things, and what sort of drives you with that? Like, where's that coming from?
I have a really big platform, right? And it's not lost on me that there's a couple of different ways that I could use that platform. As I've gotten more comfortable having that platform, I've decided that there's a lot of information that people need to have that isn't as readily available or kind of shared in the way that I think is important. And so, I always joke that if you watch the narrative in the media around this money laundering stuff, right, with banks, it's always presented as a money laundering scandal.
Yes.
Well, no, money laundering is a crime, right? And so I call them crimes.
Yeah.
Now, people, that's really aggressive. It's all, well, let's just call it what it is. And the words we use are really important, right? And so by presenting hey, these are facts, right? They are charged with laundering billions of dollars, which is a crime. It reminds people that, look, bad people do bad things regardless of the industry. So there are bad people in crypto doing bad things with Bitcoin and other cryptocurrencies, right? Nobody can deny that that's happening. But there's also a lot of bad people in the legacy financial system. And so we don't say, hey, we shouldn't use the legacy financial system because there's bad people, right? I saw a report, I think it's the United Nations Office on Drugs and Crime, just came out with this report, and Bloomberg wrote an article. They still think that $2 trillion of fiat currency is money laundered every single year. $2 trillion. The crypto market cap's $100 billion right now. Right? Like, the crypto market cap is minuscule, the entire market, compared to the amount of capital that's laundered every year in the traditional financial system. Now, does that make either one right or wrong? No, right? But I think what it does is it just demystifies a lot of this stuff, and it helps people anchor on this idea that bad people do bad things regardless of the industry, and just because there's bad people in crypto doesn't mean that we shouldn't, we should just throw it all out. Yep. We've got to go and figure out where are the bad people. Let's actually get them out, right? Let's throw them out. But this technology is real. Every stock, bond, currency, commodity is going to be digitized, right? We're moving into this automated digital world, and so let's go focus on the good aspects by getting rid of the bad people. Then just saying, hey, look, crypto is really bad, and it's drug dealer money, and everything should just be wiped off the face of the planet.
Yes. Last two questions. Want to talk about. I'm mindful you've got a hard stop as well, and we've got actually I think there's probably a number of questions that have been banked up on the channel right now. I'm sure everyone's like,
well, I'll come back and I'll do it again at some point.
Yeah, we'll have to we'll go phase 2, phase 3. I'm sure there's more to go because we're not going anywhere. Like Blizzard or not, we ain't going anywhere.
As long as you have more LaCroix for me.
So good. So good.
You got to get a sponsorship from them for sure.
You got to get it, guys. LaCroix, send us a note. We'll get you on. What's coming up next? Where are we at? 2018, we had a lot of accomplishments.
Yeah.
A lot of challenges. 2019. What sort of?
Everyone was yelling, the institutions are coming in 2018, and now the running joke is like, oh, where are the institutions? They're all here. Right? And they're doing things, and they're doing it quietly, but there's not a bank on Wall Street that's not involved in this stuff, right? There's not an institution that is a permanent capital allocator that hasn't at least looked at this stuff, right? And so now that doesn't mean that the capital allocators in the institutional world are all in, right? But they're all looking at it. The banks, every single one of them is doing something in the space around blockchain technology, right? Some of it is actually real and tangible and will actually become something. Some of it's just, kind of woo-woo magic stuff that will end up not, turning into anything, but they're talking about it. And so I think that 2019, you're going to see a bunch of announcements come out from these organizations, from these institutional investors that show when people were yelling and screaming in 2018, the institutions are coming, they actually showed up, right? Now, the bigger question is, when does that show up in price or innovation, et cetera? And it goes back to this Bezos quote that he has around Amazon. He had these earnings reports. So he said, hey, man, congratulations on the earnings report.
Yes.
He said, hey, the earnings report this year or this quarter was baked 2 or 3 years ago, right? And the work I'm doing today is going to be show up in the price 2 or 3 years from now. Crypto's no different, right? The work that was done in 2018 isn't going to show in 2019's price. It's going to show in 2020, 2021, 2022, right? And so I think that as we start to uncover more of what's going on behind the scenes or in the shadows, what we're going to see is, the future looks much brighter than the past. And we're talking about this was the best performing asset over the last 10 years. And for the future to look brighter than the past, that's pretty, exciting stuff to jump out of bed every morning and go work on.
Awesome. We'll ask everyone on the show, New Year's Eve, 2019, the clock strikes 12. What do you think the price in US dollars? This is not financial advice. No financial. 2000. What do you think the price of Bitcoin, US dollars, might be? Now, this is we did this last year, and there was one person who got kind of close. But let's just assume this is going to be. So this is not something to base your financial decisions on.
I have no clue, right? But what I will say is, I don't agree with the people who think there's going to be this massive bull run in 2019. I think we probably go sideways for most of the year, if not the whole year. And so call it, somewhere between, less than 10,000, pretty high confidence level, somewhere between like 2,000, 5,000, again, decent confidence level.
Yep.
So it's not something where there's this big bull market. And I think it's easier to say what's not going to happen than what actually is going to happen, right? And look, I've been proven wrong on a bunch of different price predictions, etc. So we'll see what happens. And the only thing I can tell people is this stuff's not going away.
No, I agree. Do you have a final number on that pump? Any you want to give? Throw something out there just for the clip?
Not zero.
Not. All right. Thanks so much, guys, for tuning in. We got jet. We got more things to go and conquer.
Yeah,
and
let's do it.
We'll come back again, and we'll give you guys. There's a lot more questions, and I'm sure everyone's got a lot of questions they've sent in as well. But thanks so much for coming on the show, and really appreciate you.
Yeah, absolutely.
Well.
I just want to do this the whole time.
Yeah. Do subscribe, guys, and we'll see you guys tomorrow. Yeah.